Gold prices have touched a record high, hitting $2,449.89 per ounce in the session. Recent economic data has boosted chances for interest rate cuts by the U.S. Federal Reserve. U.S. gold futures gained a bit too. Spot silver followed suit and hit an 11-year high. Unlike gold, though, silver is considered an industrial commodity since it can be used in products such as solar panels. Now back to precious metals, they went the opposite route and dipped. For more analysis, I talked to Daniel Lakaaye earlier. He is the chief economist at the Tressis hedge fund, also professor of global economics at Madrid's IE University Business School. Daniel, great to have you with us. Now, gold price hit a record high today. What do you think is behind this rally?
The rally in gold prices comes from a number of factors. Number one, there is an increasing level of demand from central banks. We have seen that the Central Bank of China, Russia, India, many central banks are increasing their exposure to gold in order to pump up their reserve base and have it less dependent on the fluctuations of treasuries and bonds, which is usually what they have in the asset base. The second one is that the supply of gold has been significantly weaker than what was initially expected in 2024. Production has been slowing down, and although demand is creeping up, supply is not able to catch up with that as fast as expected. And the third one is a monetary factor. Many investors are seeing that the Federal Reserve is going to continue to be accommodative. When the Federal Reserve announced that it would slow down its normalization of the balance sheet, it basically meant that it was implementing a hidden quantitative easing. So considering that the deficit spending of the government is not slowing down, investors are seeing that there will be more monetary easing, which means weaker currency, which means obviously stronger demand for gold.
And it seems that China has been buying a lot of gold lately. What's your thoughts on that?
Well, China has more than doubled its gold reserves, and it's now at the highest level of gold reserves to total assets in the last 40 years. And that comes mostly from the need of China to try to diversify the asset base of its balance sheet, of the central bank, away from U.S. treasuries. As everybody knows, China has a very significant amount of U.S. treasuries in their books. However, those treasuries with perpetuated inflation are coming down in price. They're not increasing the price in the market. And that negative impact is hurting the balance sheet of the Chinese central bank. So China needs to strengthen its position in gold in order to reduce its exposure to US dollars. And it's showing that it needs to purchase a significantly higher amount, because if we look at the total percentage of gold relative to the asset base, to the total reserves, it's less than 4.5%.